Good morning, friends, and welcome to the pre-market view. We are seeing recovery across the global markets, led by the European markets, which were up about 0.3 to 0.5%. Also, US markets, after about 2 days kind of a losing streak, have recovered and they were up about 0.3 to 0.5%. Some of the earnings which were announced in US were in line with expectations, and in terms of data point to watch out for, ECB and Bank of England are going to have a policy review meet where the expectations are that the rates would remain unchanged. When we look at the Asian markets, we're seeing a sharp recovery in the last about 15 to 20 minutes of trade. So the Japanese markets are up about 1%, and most of the other markets like Korea and Taiwan are also showing a lot of strength, particularly in the last about 15-20 minutes. Also important to note is that the yen has actually started its downward movement and is quoting below 88.25 versus the dollar. When we look at the flow situation, same trend. FIs were net buyers in the cash market to the tune of about 850 crore, whereas the domestic institutions were sellers to the tune of about 518 odd crore. Back home, our markets saw a late 1 hour kind of a sell-off, particularly led by the metals, some of the capital goods names like BHEL. Also, some of the banking stocks saw weakness, but overall the market was holding on to around about 6,000 levels. And today, when we look at the SGX Nifty, it's suggesting that we are going to have a uptick of about 30 to 32 points on the back of the strength in the Asian markets. On that note, let me invite Shaivar to take us through important F&O cues, ideas and strategies that we could have in the F&O markets.
Good morning, friends. Let's have a view at derivatives. Friend, from past couple of trading sessions, we have been seeing that Nifty future is continuously going under a reduction in the open interest, and in yesterday's trade also we have seen that the Nifty future has underwent reduction by around 1.5 lakh shares. But what we have seen in yesterday's trade is that some profit takeaway has been taken place by the market participant. Now the PCR ratio is still above the mark of 1. And if you talk about the implied volatility on net basis have increased marginal. So that's been indicating that we would witness a volatile move in the market. But talking about the activity on the options front, there's no drastic or dramatic change in the options activity in the strikes. We have seen a good accumulation continues to take place in 6,000, 6,100, 200 and 300 strike price on the call side, whereas on the put side we have seen some unwinding, but there are two strikes which have seen addition, that is 5,800 and 5,900. Our weekly VWAP is 6,000. We have seen that Nifty future has closed below 6,000, that is marginal by 1 point, but we would still review our weekly VWAP tomorrow, that is on Friday, and on 6,000 the closing, or 6,000 on closing basis would act as a good support for the market in the coming days. Talking about the stocks from the intraday perspective, Coal India is looking good, so one can maintain a stop loss of 361 rupees 10 paisa. GAIL is also looking good, so one can maintain a stop loss of 363 rupees 95 paisa. Whereas Aurobindo Pharma is looking a bit weak, so one can go short with a stop loss of 200 rupees 20 paisa. Thank you.
Friends, here are the important news and events that we are tracking today. First of all, for the multiplex industry, there is a relief as the CCI has dismissed the charges of cartelization and abuse of the dominating position by the multiplex owners. And this would be a big relief for companies like PVR, Inox and Reliance Media Works. So watch out for some positive action in this space in today's market. Further update on the oil and gas sector reforms, and we hear that the oil ministry has prepared a note hiking the diesel prices by about 3.5 to 4 rupees per litre. It could be a gradual price hike. Also, the LPG price has been proposed to be hiked by about 50 to 100 rupees per LPG, and the cap also has been relaxed to about 9 cylinders per year as against the earlier cap of about 7 cylinders per year. And in terms of other development, the bulk buyer of diesel like railways, metals, mining, other industrials, they will have to buy diesel at the market rate. And if this move is implemented, then it could help government save the subsidy to the tune of about 12,900 crore. So overall, we hear a lot of momentum on the oil and gas reforms, and this should definitely be positive because the deficit that the government is grappling with in the oil and gas sector alone is to the tune of about 1.7 lakh crore. So some of these measures, if the government is able to take, then it should definitely be a big positive for the overall deficit, as well as for some of the companies like BPCL, HPCL, Oil India, ONGC, because we've seen some strength into these stocks and that momentum may continue for a while. Today, Sintex Industries is going to be announcing the numbers, and at the top line level, we are looking at a sales turnover of about 1195 crore, which would be about 3% kind of a YOY growth. And the net profit number that we are looking at is about 77 crore, which would be about 6.4% kind of a YOY growth. Also, other thing to note is that as per media, about 700 odd workers of Sintex Industries have gone on strike, and this will be the 10th day of the strike. But the management has clarified that most of these workers are not hired by them, they are hired by contractors, and company does not expect any kind of issue on that front. This would be a bit of a negative in terms of development for the stock, but overall in terms of performance we think that it should be good. Also friends, Infosys will be announcing numbers tomorrow, that's 11th, wherein we are looking at a net profit of about 2,193 crore, which would be about 7.7%, 7.4% kind of a negative growth on the EPS front. But in terms of dollar revenue guidance, the organic growth could be trimmed down to about 5%, but since company acquired a company Lodestone, combined numbers could be about 5.5% higher in terms of guidance that the management could roll out. And in terms of the resetting of the USD INR, it would be at about 54.5 against about 53. So that should also help the EPS. So though this time around the expectations are low, there's a belief that the management will not disappoint on the core operational performance and the guidance part of it. For Reliance Industries, some positive news, as the newly formed Cabinet Committee on Investment is considering clearing of about 47 oil and gas blocks, including Reliance Industries KG D6 block, which would be positive for the sector as a whole and Reliance. So one can go long on Reliance with a stop loss of 835 and a target of about 878 to about 894. Alok Industries has hived off its non-core businesses like retail apparel business. Sentimentally positive, one can go long on Alok with a stop loss of 11.75 and a target of about 12.40 to about 12.60. That's it from all of us friends. Have a nice trading session. See you tomorrow at the same time.